Tesla stock getting absolutely crushed, down around 65% year to date. Investors are wondering, where do you see that bottom where you have fundamental support that prevents the stock from going a lot lower? In this video, we're going to talk about the valuation, the dynamics of Tesla stock, where it could go, where you could see that potential bottom, thinking about a range of possibilities. If you enjoy educational investment videos, please make a point of hitting that subscribe button. You are watching Unrivaled Investing. So let's understand, why is Tesla getting absolutely clobbered? Well, a good part of it is you have this overhang with Elon Musk continuing to sell billions and billions of dollars of stock. Now, most recently selling around $3.6 billion. That is both a psychological as well as a supply and demand aspect where you're pushing down shares because you have a seller. But it's also because he's saying, hey, I have to sell this stock effectively to finance his Twitter acquisition, because he paid $40-50 billion for Twitter and he used a lot of debt to it, and he doesn't want to effectively get some sort of margin call. He doesn't want to have, some sort of bankruptcy with Twitter. So, hey, he needs to keep selling his one liquid asset, Tesla. And you could see all these sort of data points about him needing to raise capital. Oh, SpaceX is, going to do a capital raise. Twitter is also open to new investors. So it's very clear there's all these data points of trying to bring in liquidity to handle this most recent purchase, because if this were Tesla alone, he'd probably be fine. And so this is causing Tesla investors to get angst, saying, hey, he's distracted from running Tesla as best as he could be, especially if we're potentially facing a recession in the quarters ahead. He's focusing on not having some sort of bankruptcy blow up with Twitter. And it's made even worse because Twitter is seeing its own problems. In one article talking about losing 50 of its top 100 advertisers. I mean, if you have an advertising business losing half your business, and by the way, you borrowed a lot of money to buy this business, this is creating real problems. And that creates this overhang of like, hey, how much more additional stock will Elon Musk have to sell, and creating that risk of like, hey, could he push the stock lower? Well, recently on a Twitter Spaces, he called out how I won't sell stock until, I don't know, probably 2 years from now. Definitely not next year under any circumstances, and probably not the year after. And so this was once again during a live Twitter Spaces. This is a little bit surprising because it seems like just within the past year, he was saying something very similar, saying, hey, he wasn't going to be doing any more Tesla sales. I think what ended up happening was Twitter's results just proved to be absolutely terrible. And he said, hey, I'm going to need this cash flow in order to keep things aloft. And even saying, hey, I'm not going to sell in the next year or two. I think Wall Street's discounting that. Investors are discounting that, because you would think, hey, that could cause Tesla stock to rebound, and you're still seeing it near its lows. Okay, so the question from here is, where does Tesla stock go from here? Well, part of the concern is, you see Tesla stock is declining, not because of Elon Musk selling or Twitter involvement, but due to the fact that the risk-free rate, so talking about the Federal Reserve raising interest rates, has spiked over the past year, and the economy is headed towards a recession. This is what stocks, especially original equipment manufacturers, so the auto manufacturers, do during this phase of the cycle, to which Elon Musk responded, yeah, bullseye, that's what's going on. This isn't actually due to his sales. This is due to the fact that the economy is rapidly going into a recession because the Federal Reserve has raised interest rates, in which case growing their business will be much, much tougher. Okay, so the question is, where does Tesla stock actually go from here? Well, first, if you're looking to take charge of your investment journey, consider unrivaledinvesting.com for compelling investment ideas, real-time portfolio updates, and our exclusive Discord server available for annual subscribers. I also recently launched 2 new investment courses for enterprising investors looking to understand financial statements, as well as trying to think about, how do I value a stock? That's a part where a lot of investors have gotten burned this past year, saying overpaying for things. In full disclosure, this is not financial advice. So let's think about Tesla stock. The reality is, I look at there's really 2 paths ahead for Tesla. And one is you sort of have a smooth continued growth path where, the CEO says, hey, I can easily see us growing 50% per year into the years ahead, in which case Tesla does extremely well. The other path is you have a recession. Maybe it's a multi-year recession because of the challenges we're facing. And I think if you look at both of those paths, they lead to very different outcomes over the next few years. Longer term, it's really the growth and the value proposition of the business that drives where it goes. But in the next, let's say 2, 3, 4, 5 years, recession could play a big role. So it's important to understand you really have 2 paths ahead of you. If you have the growth path, And if they continue to deliver, not even as good as what Elon Musk targets, the 50% growth, if I, pencil out 20 to 30% annualized growth over the next 5 years, and I assume very slight margin expansion from what they've been able to achieve, partly because, they have incredible manufacturing facilities, or they just sort of keep their margins where they recently were, around 20%, then you're looking at a business currently trading around 30 times earnings, which is really incredible for a business growing closer to 50, 60%. So if the growth story holds up, you say, hey, I'm buying something around 30 times earnings because it's doing around 13 billion, in earnings, around $400 billion market cap. These are ballpark figures, and you assume 20 to 30% annualized growth from here, assuming a 20 times multiple. So some valuation compression over the next 5 years, trying to say, hey, let's be further conservative from where the market is today. You could pencil out effectively up to 250% upside if they execute at 30% growth and they have a 25 times multiple. If they just sort of stay where they are at their current margins and they effectively a little bit more than double their business, 20% annualized growth, and they have a 15 times multiple, so the valuation falls in half, you're looking at the stock price effectively go nowhere over the next 5 years. So this is, I'd argue, starting to look like an asymmetric setup where if you have continued execution, continued solid growth, then you could have hundreds of percent upside. But once again, this is a hypothetical valuation framework. Stock price can go way higher, way lower. It depends on the execution of the business. So how do they perform? So then the next question is, well, what happens if there's a recession? And you're starting to see some concerning data points along these lines. For example, Tesla stock sold off around 8-9% recently when the news came out that they were, offering some $7,500 discounts on their popular models, Model 3 and Model Y, making, hey, is this possible because they're facing softening demand, which is also the point that Elon Musk even called bullseye in that prior Twitter post. So the question is, okay, so what's this mean for shareholders? Because on the one hand, if you have the growth path, then you're talking about several 100% upside. If you have a recession, how low does it go? Well, it's important to understand there's different mindsets. There's different valuation frameworks that investors use depending on which path and where you are. From a psychological perspective, in a bull market, people put a lot of focus on growth. So if you say, hey, I'm going to keep assuming, let's say 20, 30% growth range and some sort of future multiple, that's how you get that 200% plus upside, or maybe just flat over the next 5 years. But if you say, start putting on a tougher mindset, a mindset saying, hey, cash is a real opportunity cost. Right now you can get over 3.8%, cash at Interactive Brokers. There's a link below. Folks say, hey, there's a real opportunity cost. And also there's a real risk that we're in a recession. How many people will want to buy cars? What happens to demand in that picture? Will Elon Musk even be able to grow Tesla's business? What happens if sales actually contract because you're facing a tough recession? Now, Elon Musk and Tesla, they have been able to take market share over time. So even if there is a recession, there's a good chance that they're able to take market share and continue growing, but it'll be extremely tough. And so in this second mindset, this recessionary mindset, folks are saying, hey, what's the free cash flow yield? What's the free cash flow that can be returned to shareholders if they needed to, if they wanted to? Currently, they're doing around $13 billion in earnings. Ballpark figure for free cash flow, ballpark. If you say investors want a minimum of a 5% yield, based on that, once again, that recessionary sort of framework, people are putting more conservative hats on. This is very different than the growth hat that I just called out. If you have this growth situation, the recessionary hat of people being concerned, let's see how the results play out. In that situation, if you want, let's say, a 5% yield on $13 billion valuation, well, that means effectively a $260 billion, valuation on Tesla. 13 billion divided by 5%, around 260 billion. And that, would suggest another 40% downside for Tesla stock before you start getting that sort of fundamental support, just wearing that sort of conservative recessionary hat. And so it's important to understand that's why you can get just tremendous volatility with the stock market, is that one moment, one quarter you can have, hey, what's the growth rate? What's the earnings power going to be in the future? In another situation, you're putting on the like, what's my cash flow now? And what can you return to me as a shareholder? Or what can you use to buy back stock right now to sort of support the share price? Personally, I look at this and I'm excited about, the things Elon Musk is trying to roll out. He's changing the world. I'd love to see some real robots. I'd love to see Westworld. I'd love to see him roll that out. Like, maybe not the killer robots, but maybe having some cool robots to help around the house would be awesome. So, I'd love to see robo taxis. As everyone, if you have parents, they're getting older, Lord knows you want them on the streets. So want more robo taxis, I like the future that he's trying to spell out with Tesla. I'm excited by it. And so the question is, where, and I'm starting to see in the growth hat that it's starting to have a lot of potential. So for me personally, I'm looking at this and I'm thinking, I want to see how they execute during the next quarter or two, because I do think the odds of a recession have gone up dramatically. And if they are able to hold up in terms of their results and continue to execute despite the fact that you have these recessionary pressures, then I'd be more inclined to buy. Now, I think there is this possibility you get a further sell-off because of the recessionary pressures. And I called out that sort of folks that want to focus on free cash flow and what that valuation would suggest. So I'm looking at this and I'm thinking, I'm inclined to consider start buying, but I personally want to own things. And what my portfolio is geared around is things that will work out regardless of whether or not we are in a recession. For example, if you own things that trade, let's say, below book value, or has, traded below some sort of liquidation value, or has that sort of free cash flow support, or, the CEO is actively buying back stock, with the companies of actively buying back stock, supporting the stock, gobbling up, share 5-10% of the stock each year. That is a situation where I go, hey, even if there's a recession, because this business is so stable, maybe they're selling a medical product, and their free cash flow is very stable. I go, hey, even if the stock fell off 50%, I'd be excited by that, because it would mean more stock that management could buy back. So I look at this dynamic. It's quite different than what I'm seeing with Tesla, which is very sensitive to the economy, arguably. And that's something Elon Musk even called out, saying, look, in a recession, these types of stocks do sell off. I'm just curious how they perform, let's say, during the next 2 quarters as we start to see more economic pressure. Will they continue to be able to grow? Will they be able to hold up their sort of record industry margins? I want to see that. I'm the type of investor that says, let's verify that this thesis is still holding up before, committing capital. And otherwise, I want to own things that I think can do well regardless of whether or not you're looking at a growth situation or a recession situation. And those are the types of companies I personally call them out to my subscribers at unrivaledinvesting.com. If you enjoyed this video talking about Tesla, please make a point of hitting that thumbs up, hit that subscribe button. Thanks so much for watching Unrivaled Investing.